right, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. Great to have you all with us. Joining us this morning, Peter Maguire, CEO Australia of Trading.com, Victor Yang, Senior Analyst at the JLC Network Technology in China, and David Elward, Pricing Director of the Energy Transition at General Index. Thanks so much, everyone, for joining us. Peter, let me start with you. We've got a few bulletin headlines on our daily sort of digest, but one of them is Powell signaling the Federal Reserve may move more slowly on interest rate cuts. Of course, we've just had our first cut in a while last week, and of course Trump and his administration pushing for more. What do you think has sort of spurred him to say that, and does it really make a difference? I mean, in the sense that these are quarter points, aren't they, basis points, and what impact do you think they're having on sentiment for commodities?
Well, Dyala, good to join you from Sydney, and here we blast off. Well, I tell you what, tomorrow you've got a GDP number for Q2 tipping 3.3% annualized. And if they confirm that, then the US expanded to its highest pace since Q4 2023. So there's the growth. Now we look at and you've got PCE on Friday, and that's what Fed Chair Powell's very focused on. He wants to see where that inflation number drops, and he's got to be his major concern because they've had so many revisions. There's been a revision down since around about April of this year, 2 million jobs in the US. So he's saying to himself, I can't trust the number. So I've got to look at the next part of it. Where am I from a growth perspective and from an inflation standpoint? So if it surprises to the upside, Dyala, then I'd say that Fed Chair Powell might be right. One needs to be conscious. You've got certainly differing viewpoints across the fabric of the FOMC members. And you've got Stephen Moran, the new elected person to join the Fed from President Trump. He wants to see 200 basis points worth of cuts. So he thinks that the economy is doing extremely well, and they've got outstanding numbers from a revenue perspective coming in from tariffs. You've got a US dollar index that's been crushed. You've got gold now through $3,800 an ounce in the last matter of minutes or hours. And you're talking that US dollar index really was created last week, Dyala, at a 95.8. It's since bounced back over 97. Crude oil seems to be very much range bound. You can't make a dollar out of it if you're trading. And the focus has been very much on silver and gold, and all the other commodities. Well, no one's really paying too much attention. I think everyone's long gold, and equities have been outstanding.
Yeah, absolutely. That run is still continuing, isn't it?
Yeah.
Victor, I mean, let's talk a bit about oil prices. Aren't, as Peter just said, moving much. They've been very steady in a tight range, comfortable range. Some people arguing a good range for producers and consumers. China being one of those large consumers, how's China feeling? It's been labeled as supporting the price where it is, along with other factors, because it's been stockpiling. Can you give us an update on that stockpiling and buying sentiment for crude, do you think, going forward into the fourth quarter?
Yes, thank you. Yes, last week and earlier this month, when we were in Singapore, a lot of our customers asked us about the stock building by China and how long this will last. We see this will continue at least in the coming months. Some say it will last until March, and we can see quite a few projects, storage projects under construction and coming online in the coming months. So we can still see this appetite from China in at least the coming months to go. And for now, the price is quite attractive. We'll say around 60, they will still be attractive. And there are now so many uncertainties around the world, and energy security is a top priority. So I believe China will continue to build up a stockpile at least in the coming months.
Okay, so for another few months, that's interesting, and lending some support, and we'll talk later about what else might be supporting the market. David, good morning. I mean, talking about China, just sticking with that geography, your specialty is in sustainable aviation fuels and biofuels, etc. China is sort of making an inroad, isn't it, as a supplier of that, cleaner fuel, if you like. And it's sort of where would you see its global share of the jet fuel and SAF sort of export markets going? Obviously that's a long-term question, but I mean, is it a serious inroad into other markets, or give us your trajectory for that?
Yeah, thanks, Dyala. Great to be with you all. I'm actually dialing in today from Oslo, where we know, just before we come to China, where we know very much Trump would like to be here himself in the next couple of months to come up and pick up a peace prize. But perhaps we'll return to
Yeah.
that
Or
a
what
little
about
bit
any
later on.
drones? How about any Russian drones? You see any of
Well,
those? That's the other thing
yeah,
that's been
well,
happening over Scandinavia.
Oslo Airport here earlier this week, along with
Yeah.
Copenhagen, had to shut temporarily because they had some drone activity. I think the Danes said, well, they didn't rule out the possibility of it being some interference from
Yeah.
Russia, but nothing confirmed. And I think airspace now reopened, but it just sort of signals that the sort of the tensions that are around, and we've
Yes.
seen some reaction on oil. But I mean, look, let's stick with China for now. You're right. I mean, so like I think it's really useful to sort of split kind of China on aviation fuel into both the streams of jet fuel and SAF, because I think they tell slightly different stories. So on jet fuel, we've really seen, right, since the pandemic, um, aviation fuel demand in China, like sort of recovered, perhaps, or recovering domestically, but still weaker for international travel. And like that's the kind of the part of the context in which China's domestic refiners also kind of battling sort of lower demand for gasoline and diesel gas oil have been producing more jet fuel. Now, so we've seen quite strong fossil jet fuel exports from China into the international markets for the last couple of years. This year looks like being kind of almost as strong as it was last year. Let's see if things continue to climb. There's a couple of months left, but it's sort of on a par with 2024. And that's very much a lot of that is coming to Europe. It's coming west. If we look at pricing spreads currently, the sort of like quite the closely tracked east-west spreads for jet fuel are like very favorable to ship kind of surplus product, both from the Far East, from China, from South Korea, but also if there's sort of marginal barrels available in the Middle East, those are likely to come west, either to Europe or to the US, where pricing is quite strong. Um, I suppose some of that on the jet fuel side has sort of settled in to a trend, right? So like there is some competition that China's exporters are putting up with the Middle East, but the Middle East remains the kind of the very dominant exporters of fuel to destination
And would you just, I
globally.
mean, just to take you up on that point, would Middle Eastern exporters feel, I mean, as you said, they're still dominant, but I mean, again, the volumes will increase from China. I mean, would you see Middle Eastern producers or exporters altering their strategies in any way as a result?
Well, it's a good question, and I think it perhaps brings us to a sort of really sort of zero in on what do higher jet fuel exports from China reflect. Like, I'm not sure it reflects a strong sort of situation in China, right? They're kind of having to make the best of a tricky situation. Maybe it's sort of a kind of paper tiger, sort of slight facade in terms of kind of domestic strength. So how long do we see that? I mean, I know some of the guests earlier this week have been talking about how there could be consolidation among some of the teapot refiners in China, and if that happens over the coming years, that perhaps some of these higher jet fuel exports will taper off. I think if we want to sort of pivot this discussion into more of the sustainable aviation fuel side, I think that there is a story there from China's perspective that speaks to a greater sort of strength in its position in those emerging markets. It's like we're sort of look. I think with SAF, we always have to. I have to temper my own excitement and enthusiasm for this with sort of just the context that it's like we're talking about
Early
like
days.
around 1%
Yeah.
of total aviation fuel consumption, but there's certainly even at this very early stage in these new markets, it is an area that China sitting on a lot of domestic used cooking oil as feedstocks is really well placed to be able
Yeah.
to supply and is doing so, positioning itself as a growing powerhouse in that market.
Okay, great. Thanks, David. Peter, I mean, you mentioned earlier about, you kind of gave us an overview of commodities, the dollar. I mean, one commodity that isn't moving because of a weakening dollar where it should be is oil, right? I mean, it's just not shifting. It's not
Yeah.
getting any support from being, cheaper. Obviously, it's cheap compared to other assets. Nothing's moving. China stockpiling isn't moving it up. Geopolitical tensions aren't really, they're providing support. But what's going to take for oil to go up into the next sort of, I suppose, to the next resistance level? And many people are saying it's going to happen.
Well, you would
If
have to
not
think
China,
first.
China's not giving the support, as an
Well,
example.
China's not. No, certainly
Yeah,
not. And China's got their own hands full as far as from an economic standpoint, and they've still got property overhang, and we've discussed that many times.
yeah,
And that takes a long period of time to wash through. So you've got to look at geopolitical tensions and what's the situation with President Trump trying to make things not be as warlike, and these are the first steps of it. So if you were to see an escalation in geopolitics, then you would probably say that you would see oil prices with a war premium built in. That would force prices up. Secondly, you would think that we haven't seen anything dramatic happen, and we're over the first half, and we're now in the second half of
yes,
the hurricane season, and there's nothing there to really say, "Wow, we've got a carousel of hurricanes, and we've got 10 lined up." That hasn't happened. So that would be weather outages, and we don't hear too much as far as bad news coming through. Thirdly, one would say if the US dollar, if it was to further devalue, but one's got to be conscious it's down 12 or 13% since the start of the year, and oil's down a similar number. So if you're buying in euro, it's very, very cheap, certainly yen and probably pound. So that's been wonderful for their consumers. And what's the story going to be with Russian crude and President Trump and India? The storyline there with
yeah,
tariffs and the whole impact. And now India's really on the warpath, as far as President Trump's concerned, with the introduction of the H-1B visa program. So I look at it from a big global picture standpoint, and I go, well, there's no real key drivers. Then you've got the Saudis and everyone wanting to increase production, and that seems to be the common thread leading into Christmas. So I don't know what's going to drive prices higher. And also President Trump coming out of the United Nations saying he wants to, as far as the World Bank's concerned, he pushes the World Bank to finance more fossil fuels for development.
yeah,
So
he was.
there's really a drill, baby, drill mantra that he's trying to engage across the world, Dyala. So I don't know what's going to be the catalyst to drive prices
Yeah,
higher. I
yeah.
think at
More
the moment, it's a
liquidity,
little
I
bit of a
suppose,
race to the
much
bottom.
more liquidity, maybe many more interest rate cuts perhaps will finally give that trigger. Yes, he was dissing the whole green agenda in his speech last night. And the other thing, thanks, Peter, the other thing, Victor, he was doing was, again, telling everybody, stop taking Russian oil. He's now, I mean, he's been saying that anyway, but he's kind of now done an about face overnight saying, he's pro-Ukraine now and anti-Russia again. And China, of course, was taking a lot of Russian oil at one point, Victor, with great discounts, but those discounts have reduced. Give us an update on its intake of appetite for Russian and Iranian oil, even, given also the secondary sanctions that the US has been threatening.
Well, Russian was still the biggest supplier to China in the first 8 months of
Yeah,
this year. But imports from Russia actually declined by over 8% because of a lot of factors, including some issues caused by sanctions. So we see quite a significant drop in imports from Russia already. And Meanwhile, China is still trying to diversify its crude imports and still importing quite a large volume of other discounted barrels from some other countries, Yeah, but some refineries, as you know, have been sanctioned by the United States earlier this year,
Yes.
and they became more cautious about taking some barrels. But on the whole, such imports have not dropped very significantly. We might see small jobs in the coming months because of some refineries, but we are not expecting to see a large drop in such imports.
Okay, thanks, Victor. David, back to Europe and sort of energy transition. We talked a bit about SAF fuels and jet fuels and China's sort of advent in that space. But just generally speaking, we've talked about energy security this morning. Again, at the forefront really all the time now, being used also as an excuse to slow down transition agendas, whether it's IOCs slowing those down or countries. Where's Europe at the moment, do you think, on that path? Europe's always been at the forefront of that. It has some ambitious sort of plans on the political front to sort of, obviously carry on with its agenda. But do you feel that there's more pressure from a cost point of view, even on the continent, to sort of prioritize other things like defense expense, and also, good old reliable conventional energy is just a bit more secure from an economic point of view?
I think it's sometimes useful, right, to differentiate between what is the sort of short-term political noise against the kind of medium to longer-term trends. And on the former, there's the rise of populist parties across Europe. In the UK, where I'm from, where the soundings are very much right to sort of lean into the higher costs associated with energy transition, and to instead maximize existing fossil fuel resources. But then I think we have to counter that with what are quite substantive policies that both European Union and UK, where I'm from, that are already in place and are already in motion.
What about, in the UK, we had the whole cost of living, crisis when we had the Ukraine war launched 3 years ago. Of course, gas prices and domestic sort of cost of living, everything went stratospheric. That's calmed down, admittedly. But as winter approaches again, is that something that, from the UK perspective, people get nervous about all the time? Obviously, we could talk about gas prices as well, but is that, or has Europe settled into a more comfortable state of energy security? LNG imports from America, etc. It doesn't feel as vulnerable anymore.
Look, I don't think those issues go away, right? They're perhaps not in the news so much. Inflation is lower, but like in the UK itself, I know there was a kind of an update to some kind of some forecasts earlier this week that the UK is still expected to record the highest inflation out of the kind of G7 economies. And look, we've got a government, a UK government, that's under a lot of pressure on various fronts domestically. And so if inflation kind of rears its head again, then cost of living will return to the agenda, and these sort of questions around transition fuels will become more challenging for the government in the short term. We've also got. I note that there was a clip I saw going around on social media of from the European Parliament. We know that, like, the deal, was it the greatest ever deal that Trump announced between the US and the EU a couple of weeks ago?
Oh, yes.
Where it involved
LNG
like pretty
intake.
substantial quantities, sort of something like 700 billion of investment in the US kind of energy sector, or
Many
for
people, though, are
US
dismissing
fuel.
that that's going to happen. Practically
Dismissing that, but
speaking.
it's being used by sort of some of the parties, the Greens in the EU Parliament, to say, well, look, we should be spending that money on And I know it's sort of perhaps not a real figure, right? Kind of cobbled together for the deal, but there's still a lot of policy in in the EU which is geared towards supporting and backing the transition. And if I signal out sort of renewable fuels and SAF as one. We're 9 months, almost 10 months through, 9 months through the first year of mandatory blending of SAF into the aviation fuel supply. 2% now has to be delivered by aviation fuel suppliers. And like sort of there's been questions from investors around will that actually stay in place? Like some hesitancy.
Right.
And the commission at an event I was at recently in London for synthetic fuels was signaling, look, these are here to stay. So there's sort of short-term noise, but I think there is
Yeah.
commitment to stay on this for the long haul.
Okay. Peter, let's just go back to gold. You mentioned it hit 3.8 now, or on the way to 3.8. I mean, again, continuing to rise. What is, but give us your top three triggers for that. China demand has been, Chinese buying, I should say, for gold has been attributed as one of those in the past. Liquidity. I mean, what would you say is driving that, pretty positive rise continuously now?
Well, put our minds back 2 years ago, and that October 7, Dyala, and we had a low of $1,807. So now you're over 100% rise in 102 weeks. It's up 50% from a year ago when we were at 2,600. So it's parabolic. So first off, it's gaining momentum and it's actually increasing in velocity, the uplift, which is quite unique. And it's taking its little brother silver for the ride as well. That's really had
Right.
an enormous rally. So you've got central bank buying, you've got appetite as far as, and India, don't leave that out. You've got the return of Main Street is buying, going to Costco or going to, metal dealers like they have in Sydney, and they're going to a bullion store and buying an ounce block or buying, if you're fortunate enough, a kilo bar. And Dubai, I mean, you've got retail outlets over there that I've spoken about, and it's incredible what the appetite is across all the Middle East and everywhere in the world. So first off, you've got increasing demand. Secondly, you've got an interest rate environment. People are worried about the states. You've got an is it overcooked stock market? Well, all I know is it just seems to get record highs week in, week out. And then you've got the next part, which really creates a lot of unknown, and that is what's going on with interest rate environment and where does the US economy or where does the global economy move in 26. So it seems to be that there's a lot of talk from a tariff perspective. They're looking at tax changes, dramatic tax changes across the landscape of the US, all of these factors. So I think it's gaining in momentum. Goldman Sachs coming out and saying 5,000 is a target. Yes, it probably is now. One would have laughed if you said that a year ago, but hey, we're at 38 plus, and I think 4,000, the way it's going, you might be there the first or second week of October, Dyala.
Yeah, I mean, it's really beyond. And if you look at the trend of the last 20 years, we just haven't seen this kind of run at all. And
No.
we've had other things, though, other cycles playing out, but it is quite unique. We have the survey question up there. We're talking about interest rates that Peter just mentioned again, which is, that we have there's Federal Reserve signaling that it may slow that down or not, but how is that going to impact oil demand, price trends, including for gold and anything else over the next quarter? So what level of impact is it going to have? Victor, I mean, Peter just mentioned tariffs. Again, give us an update of where the China-US tariff talks are. They've sort of varied a bit over the last year. Again, does China feel that a deal finally will be settled and everyone can get on with their business? Where's the sentiment at from your perspective?
Well, I'm not so optimistic about the tariff negotiation between the two countries. As we know, both countries lately met again, but there was no specific achievement on the negotiations. And just from what I learned from public news, and no progress was made. this. There could be, well, they need to talk again next time, but there might be some kind of suspension, but I do not expect both countries to get what they really want from each other, because some terms are not acceptable, I would say. And for instance, the deal about TikTok, the sales of TikTok,
Yes.
and then, yeah, well, it's not likely for the country to sell the company completely with the core technology. And I also heard there was also some other terms that China would not accept. It was kind of principal problems one, so I do not expect they would really achieve a very good deal, satisfied for both Well, I do not really expect that.
Victor, while we have you, I wanted to also get your opinion. I don't know if you have one, because obviously in terms of the trade relationship and exports from China, China this year the stock market, recovering to an extent, very much backed not by the property sector stocks or other sort of, let's say, industrials, but the tech companies. A investment into chips and AI, and those companies, Alibaba's back, etc. Making a big recovery and a lot of investment and headlines out of China on that. Of course, that impacts its trade leverage with the States in a very big way. Should we be believing the headlines we see out of China? Is it playing real catch up with other manufacturers of those tools, if you like, for the tech boom?
Yes, well, and we continue to see developments in the high-tech industry this year. And
Yeah.
this is one of the main sectors that drove up country's GDP growth in the first few months. In addition to larger government spending, another sector is the high-tech industry that drove up GDP growth. And we see the country's focus is more and more on these sectors, as now is pushing forward with the industry upgrade, and will emphasize more on such industries for future development, and is now increasing its support for these industries too. So we will see more investment in these industries in the future. Yeah.
Okay, thanks, Victor. David, let's go to you to wrap up for us. I wanted just to talk a bit about biofuels. Again, one of your specialties, if you like, or your areas. And I mean, give us a geographic advantage there. I mean, it's correct me if I'm wrong, but South America is also a big sort of geography for that. Countries like Brazil and others. I mean, again, where's the progress on that front for adoption, for export? Where do you see the geographies, if you like, competing on that front? We talked about SAF, we talked about jet fuel, but biomass, biofuels.
Yeah, look, I think within the renewable fuels space, the perhaps the biggest issue is feedstock and securing sufficient feedstock for the various types of technology pathway around. So unlike what we're used to in crude oil refining, where it's very homogeneous in terms of the feedstock source, for renewables, you've got multiple different technology pathways, and each of them can draw on different types of feedstock. Now, you've suggested too there's kind of like biomass, kind of forestry residues.
Yeah.
And where Latin America, where Brazil is very strong, is on the ethanol front, on their feedstocks created from sugarcane, and like some of that goes into existing. In South America, stays within kind of the road fuel supply chain. A lot of it already goes into the US, right, for blending into gasoline. And like, so I think that there's a lot of appetite in South America as well to sort of develop its own domestic, like expand its domestic biofuels, renewable fuels production base. They face the same challenges, though, that a lot the kind of the wider industry does, which is kind of questions around financing and investment, There's a kind of issue they call sort of bankability and secure, like sort of de-risking projects. And some of this comes back to kind of security of feedstock, but also about like kind of other questions around pricing. One of the things that we're working on quite closely. So yeah, look, lots of ambition in South America. If they can really get things moving, then they have the feedstock base to become a serious player.